Hi, my name is Taylor Riggs. I'm a reporter here at Bloomberg TV. I am so excited to announce that Tim Gokey, of course, is joining me. He is the CEO of Broadridge, of course, the company that we really know about focusing on technology and some of the solutions as it relates to financial services company. Tim, thanks so much for joining us.
Taylor, thank you very much. Great to be here with you.
Great. You know, Tim, it's so interesting as we think about coming out of a pandemic. So much has changed when it comes to the technology and the automation and some of the big technological changes when it comes to financial services. What are you seeing as some of the biggest trends that you noticed in the pandemic and now coming out?
Absolutely, Taylor. And it's interesting because I think we see that disruption always leads to innovation. And you can go all the way back to the 60s when the New York Stock Exchange couldn't clear all its trades, and they actually stopped working every Wednesday so that firms could catch up. And at that time, the number of shares traded was something like 4 or 5 million a day. It went up to 13 million a day, and everything stopped. And now it's billions because of the introduction of technology. So it's just interesting how things always, innovation leads. So, and the pandemic has been, a big disruption. It's one of many that are happening. And it is leading to really acceleration of some things that we were already seeing. And there's so many things going on, but there are two that I think are really interesting for your audience that I want to focus on. One is really the continued democratization of financial services. And the other is the continued digitization of financial services. And those are both creating real changes for capital markets firms, wealth managers, asset managers, others. And that all comes together in terms of how to address it. And the third trend that we can talk about more toward the end around mutualization. But those two are the really big ones that we see.
And you're spot on. I think democratization might be the one where people's ears perk up because we're all in this sort of meme trading, no fee, sort of everyone's on your app, environment. What are you doing specifically to capitalize on that, but also make sure that there are protections in place? Because that's been a big concern as well.
Yeah, absolutely. And look, one of the things that I think is useful for us all to keep in mind is that democratization, it is a very current topic for all the reasons you said around memes and all of that. At the same time, it's been going on for 50 years. When you look at the move away from fixed commissions, the creation of discount brokerage, the creation of online brokerage, then the creation of 401ks, the growth of ETFs. The average fee for asset management has gone down 25% in the last 5 years alone. So, the free trading is the culmination of something that's been going on a long time. And there are things coming like direct indexing and the continued growth of managed accounts that will keep this trend going. So it is a very current trend, but it's one that has a lot of legs and has a lot of future. So with that as background, I can talk about some of the things we're doing, but I do think that's an interesting point for people to remember.
Yeah, please continue. What have you been noticing as some of just the demand this time around versus other things, and then specifically what your company is doing to capitalize on that?
Absolutely. One of the things you see with this is there's been a tremendous growth of positions in the stock market. So a position is if I hold one share of IBM or hold 100, that's one position. And we are sort of in a unique position. Part of what we do is we're really the infrastructure underlining corporate governance. And as a result, we connect every broker-dealer with every fund company, with every individual investor and public company. And we measure each year how many individual positions are there, because if you go to vote at a board of directors election, you need to know that. And that generally over the past 10 years, it's grown in sort of mid to high single digits. In the 12 months that ended in June, it grew 26%. And when you dive down into it, yes, there are things like GameStop and things like that, but it's much, much broader. It's big companies, small companies, all industries. It's the online brokers, but it's also the traditional brokers. So there's something really going on in terms of an additional level of participation in the market. And so there's that trend. And then there's this trend around more voting in the market and more transparency. There were two things that came out just from the SEC this morning. in terms of making it easier for people to put forward proposals to companies around ESG. So ESG is a big thing here. There is also one around better reporting and transparency by asset managers in terms of how they're voting. So they're people that invest in them know how they're voting. And when we talk about how we're addressing it, obviously we're scaling up to support all of that. We've been working with one of the largest asset managers, BlackRock, and they made an announcement just a couple of weeks ago to enable pass-through voting, where for their institutional shareholders, they will enable them to vote themselves if they so choose. And that is really meeting, it's sort of very interesting because it's where ESG meets innovation, meets sort of, all democratization. And I think that could be an interesting trend over time.
And I think you're right in that so much when we think about the democratization of finance, you're thinking, oh, well, everyone just has access to free trades online. But as you said, there's that sort of second derivative of that, the voting, the access to be able to go to some of these shareholder meetings on Zoom during a pandemic, to be able to be in that room, which traditionally would have been a lot harder. With those shareholder voting rights, what are some of the big changes that you've noticed about some of the proposals? You mentioned ESG and the way that some of this democratization has opened up some of those meetings.
Yeah, and on the meetings, you're right, Taylor. The move to bring all these meetings online has been another driver, and we've gone from just 2 years ago 300 meetings online to last year 2,400. It continues to grow. And as we see people, some people have asked, with the pandemic going away, will that go back? And, what we're hearing is, I'm never going back. And what we're seeing in the companies that we're working with, that they're renewing and continuing those plans. Most of the voting season is largely from January to June. This past voting season, 95,000 people participated in an online meeting around corporate governance. So that access, when it goes online, the participation goes up, quite a bit. Within that, the kinds of proposals we're seeing, and this is off of small numbers, but certainly, we all hear about the Exxon case and engine number 1, or 57, I guess, sorry. But it is, when you look at the stats, the number of proposals around ESG and climate are really significantly advancing. So that's going to be a topic, I think, for a lot of companies for a while.
And not going anywhere. As you said, it seems like that certainly is here to stay. We're almost about halfway through, Tim, and I wanted to pivot if we could. You mentioned, of course, this democratization of finance, but another big theme that you're really seeing here is sort of this digitization and how you're thinking about enhancing some of the efficiency, some of the sustainability. Can you give us a sense of sort of specific, digitization is a big word that we've talked about that's been around for a while. What specific things are you noticing, perhaps maybe this year, that's making firms a little bit more efficient when it comes to sort of integrating all those financial solutions?
Yeah, it's really, it has been going on for a long time. And it's one of the things that's being driven by democratization. And then in turn, it is driving democratization. And the pandemic has significantly accelerated it because people are adopting, some 75% of baby boomers said they've adopted new tools for interaction. So people are really becoming used to this, and every firm is really racing to change their business model, leverage next generation technology, and so it's a big trend. I think one of the very interesting things is how it all intersects with AI, and so AI is going to be on top of digitization. A great example is in capital markets is fixed income. So, a lot of trading is 90% electronic. If you look at trading of fixed income credit instruments, it's 30% because they're very complex, and the liquidity is much lower. So, in the future, you're going to see AI married to help people locate the right counterparties. We're building one such platform. I'm sure it won't be the only one, but using AI to locate the other counterparty, and then new trading protocols to allow demand to be aggregated is going to really increase liquidity in fixed income. That's one example. Blockchain, obviously, a lot of people talking about crypto on this event, and blockchain is another technology that's new. Cloud, there's some recent research with financial services CIOs in terms of what percent, not just using cloud, but where their main workloads would be on the cloud. And they're saying 60% of their workload will be on the cloud by 2026, which is, that's a big increase over just 5 years.
Cloud and AI sound good, but I have to say, when you say blockchain, everyone's ears perk up. So forgive me, because that's where we're going to go. We're going to talk about blockchain, because I think it makes an interesting point when you talk about fixed income, such an opaque market. The financial markets had traditionally, not really been as transparent as perhaps maybe people wanted. How is blockchain changing that? Where on the blockchain, I believe you can probably actually see a lot of these things in a much more transparent way. And then we have a question from the audience on crypto as well, which I'll get to after.
Yeah, I do think, and I know that there will be a lot of people as part of this conference who are interested in crypto and in DeFi and, and all those things. And I think it's useful to think about sort of a spectrum relative to blockchain, because there's all the way out to crypto, where it's blockchain and it's a whole new instrument. But there's a sort of a more basic way to think about blockchain, which is, look, it's a new technology. It's a distributed database. It creates automatic reconciliations. You have multiple parties all having the same thing, and they know that it's in sync and that it can't be changed. And those characteristics give it the ability to solve, some interesting problems that whether you go to DeFi or crypto, they still solve some interesting problems. So a great example is the repo market, which I'm sure not, people don't spend, huge amounts of time thinking about the repo market, but we clear and settle $10 trillion every single day, mostly in the repo market as things roll over, because it's one-day financing, it all rolls over. And the ability to bring blockchain to the repo market to make that faster and easier is, it's a huge opportunity. We introduced a product 3 months ago. It already has $35 billion a day going through it, just helping people do trades between their own entities, from one entity in the same bank to a different entity. Right now that goes out to market, gets cleared, comes back. You can do it internally using blockchain, and it's a really nifty application.
On that theme, Tim, it's interesting. We are getting a question from the audience, if you will humor us, asking, where do you see crypto market-based ETFs in the future? Because we've talked a lot about the Bitcoin futures ETFs that we've gotten, but not yet ETFs with the underlying Bitcoin. And then people saying that you have to crawl before you walk. So this is sort of a step in the right direction. Do you see some bigger sort of ETFs as we talk about this digitization and then this democratization that ETFs have been able to provide?
Yeah, I think it's a really interesting question. It's not one that I have unique knowledge on. I think, though, the challenge has been, if for a retail investor that wants to trade Bitcoin or have exposure to that asset class, because it is really growing as an asset class, and all the big wealth managers are creating options for how to participate in it as an asset class. And so when you think about it as an asset class, how do you make it easy? How do you make it widely accessible? Today, it's largely through a separate infrastructure. And then there's real questions about where is it custodied? There have been exchanges that have just gone zap in the night. So if people had the ability to know that there was a very trusted custodian behind it, and there is an easy way to trade and participate going through today's infrastructure, that would really open the gate for retail investors to participate. And in addition, there's a whole disclosure regime that goes with ETFs, just like funds, that allows investors to know what's the cost, what's the risk, what's the return. And that transparency is so important to protect investors. And this is just an example of when you take just the disclosure that already exists for fund and ETF industry and now apply that to these crypto instruments, it's a real protection for investors.
Tim, we're coming up on about 5 minutes left. I know that there was a third sort of theme we wanted to hit on, but quickly, you did say something here about settlement and the blockchain. And I'm wondering if you can give us a comment on some of the real-time settlement issues that we've been seeing. It was T+2, then T+1, and do you see a time when we could get to some of the real-time settlements, and is blockchain the sort of way that you think that could happen, or are we just years away from that given the complications?
I personally believe in the industry is right now. We were at T+5 for a long, T+3 for a long time. We moved to T+2 just a few years ago. There's a big conversation right now around moving to T+1 and a belief that that could happen within a couple of years. And the current industry infrastructure, with tweaks, can get to T+1, and that will get a significant amount of the benefit that people are looking for in terms of reducing the amount of collateral and things like that, taking risk out of the system. Getting to T+0 is, more than a technology challenge. There's trading in Asia. There's securities lending. There are a lot of complexities inside the system that is not just technology you need to fix. It's the reality of physical separation and time zones. So I do think that will be more challenging. Blockchain is a potential solution. There are other solutions as well, but we would need to solve some of these other wrinkles.
In the few minutes that we have left, there was a third point that you mentioned, this sort of mutualization. And I'm wondering if it's hitting on this theme of where you can bring all these financial solution technologies together to simplify your life, and where companies are coming to you and saying, you know what, maybe a third party is better at doing this, and sort of divesting in that way. What are you seeing around there?
Yeah, I think what we're seeing is that people are making, first of all, they have a, you look at bringing next generation technology and digitization to their whole technology estate. They have so many things going on that, it's a big task. And so if they are able to leverage an industry solution for part of that, for some of the things that need to be done right, but maybe are less unique to them. So if they can, and you're seeing smart decisions around taking, significant chunks and putting it someplace else where they can share the investment, they can share the change, they can share the regulatory burden, and share all of that so that they can focus their energies on the few things that really make them different from their competitors. And that I think when you look back at the pandemic and the outcome of all of that, that this rise in mutualization that we're seeing will be one of the big takeaways that we have from it, because it's a real, those industry solutions, obviously we do that, but others do too. And it's a real way to accelerate a lot of the technology and business model transformation that needs to take place.
I want to make sure that I give you the last word here. Is there anything that I haven't asked you that you're noticing, any sort of final thoughts you want to make sure that we get in here? As I know we've touched on a lot of these three themes and digressed into crypto a little bit, but is there anything else that we may have missed?
Taylor, it's been great. I think just coming back to this whole theme of these are long-term trends. They've been with us for a while. They're going to be with us for a while. So as people think about it, don't think about the news headline of the moment. Think about what that means 5 years from now and how to position yourself for that future.
What do you see as the biggest risk going forward as you think about the business and the climate?
I think for most firms, there's what's the risk that's out there. But for firms, I think the risk is not doing enough to be ahead of the things that you can see coming. And it's very easy to say, well, in the time that I'm going to be in my job, will that be long enough? Maybe that won't get here, and not taking the actions to put their firm on the front foot to benefit from those trends, rather than just sort of holding on to get to the next job.
Tim Gokey, such a pleasure to have you here. Of course, we know you as the CEO of Broadridge. I think sort of a great recap of getting into crypto, but also talking about some of those big themes that we've been talking about, the democratization, the digitization, you name it. Really, really appreciate your time. Thank you so much for joining us.
Taylor, thank you.